joining, but really excited. This is a combination Prepare for VC and Startup Grind Boston event hosted here with StartEngine, and give a little bit of background on both organizations. So Startup Grind started out in Silicon Valley about 11 or 12 years ago now, and really started from the founder wanting to learn from all of his or learning from other entrepreneurs, learning from other experts in different industries, and having fireside chats, conversations, panel events, and workshops. And then that model took off, expanded to different chapters, and now there's 500 different chapters around the world. So we run the Boston chapter and also get to host virtual events here with speakers, being able to bring in speakers from any location. And Prepare for VC founded that company as well. And we run combination of community events and resources for early stage startups. We have a virtual accelerator program working with cohorts of 6 to 10 companies at a time, and also offer individualized and connections to other partners and resources that can help our startups as well. So yeah, we keep these pretty interactive in the discussions. We're going to start with a workshop from Daniel and Jacob here today. And if you're not, kind of kept it open, if you're familiar with the equity crowdfunding space, or if this is your first time kind of learning and exploring it, it's meant for everybody there. And yeah, really, it's a really interesting space. StartEngine is one of the top platforms in this space, so excited to have both of them on the call today leading this workshop. And yeah, if there's any questions along the way, you can definitely use the chat, and then we'll have more extended time after the presentation for questions there as well. But yeah, I'll hand it over if you guys want to give an intro, and then kick off the workshop here.
Yeah, definitely. Thank you so much for the introduction there, Jason. I'm Daniel, so I work at StartEngine on the partnerships team, working with accelerators like Prepare for VC, Startup Grind, and everyone in between. And with me, I have Jacob Wilson, who's a member of our funding team. He talks with founders all day, every day to see if equity crowdfunding is the right fit for them. So I will kick it off here. Everyone can see my screen?
Yeah, we can.
Great. So just a few disclosures that we give before every presentation, just general disclosures from the SEC FINRA that we gotta show. All good. So crowdfunding, a new age of alternative an alternative for raising capital. So what is crowdfunding? A pretty broad term that kind of touches on a few different smaller sectors. In general, though, it just means taking smaller amounts of money from a larger group of people, as opposed to getting larger checks from a small amount of people. Typically a public audience to support a startup or a project that you're building. So the few different types of crowdfunding are rewards-based crowdfunding. Think Indiegogo, Kickstarter, GoFundMe, getting pre-sales for companies or starting a nonprofit, getting it off the ground, really taking pre-sales and just people donating to support a cause or project. Then you have equity crowdfunding, which is what StartEngine does. Other platforms like WeFund or Republic, Seed Invest also do equity crowdfunding. So here, instead of just making donations, people actually get to invest in companies. You could almost think of it as like venture capital for the everyday person. So, you can have as many as 5, 10, 15,000 shareholders who are putting in $100 instead of, maybe 10 or 15 shareholders who are putting in $15,000 to $100,000 each. Lastly, there's debt crowdfunding. Similar to equity, there's an exchange of goods and services here where you're not just donating funds, but there's an expected return for the backer or investor. Closer look at equity crowdfunding, as that's what we're here to talk about and what StartEngine does. So equity crowdfunding allows you to raise up to $75 million from the general public. These are everyday people, with a credit card or a bank account. They don't have to be accredited, anything like that. So pretty much anyone can invest in your offering as long as they're over 18. The limitations for investments really just revolve around how much individuals can invest, which is essentially 10% of their income or net worth, whichever is greater. And all these campaigns are run through what are called funding portals, which are registered and regulated by FINRA, as well as broker dealers like StartEngine, who can issue securities through the SEC. So there's two main options to raise from the public through equity crowdfunding. One is called regulation crowdfunding, or Reg CF for short. That allows you to raise up to $5 million. And then there's regulation A plus, or Reg A, which allows you to raise up to $75 million. So we'll talk about the differences shortly. So for Reg CF, like I said, you can raise up to $5 million in a 12-month period. So this is broken up into, StartEngine typically breaks it up into two smaller rounds, or, you extend it. So you can raise up to $1 million with only reviewed financials. And then if you want to raise up to 5 million, you just need a CPA audit. So typically what we'll do is we'll work with companies, launch them at a $1 million raise, during that time, get the financials reviewed by a CPA, increase the round to 5 million, and help, get the rest of the funding they need while they're securing that first million. So like we said, this is open to the general public. Anyone can invest. They don't have to be, a financial professional. It could be your mom, your dad, your aunts, uncles, friends, some random stranger. Anyone and everyone can invest as long as they have, bank account or a credit card. Some of the benefits are that the entrepreneur stays in control. So you get to set their own terms of the offering. You're not giving up board seats. You're not giving up voting rights. You're retaining more control of the company than you likely would otherwise. With Reg CF, there's definitely regulatory requirements and some upfront costs. As shown here, there's some legal and financial costs. This is typically just having your cap table cleaned up, converting from an LLC to a C Corp, or a similar structure change depending on your taxes and the way your organization is organized. And depending on how quickly you're able to turn around certain documents and help our team essentially build your campaign, most of these can get launched within 1 to 2 months. So there are a few platform fees, which we'll talk a bit more about later, but these are typically just in the form of percents raised of cash, as well as a percent paid in equity. So that's not a percent of your total company, but it'll be a percent of your raise, about 3%. So if you raise $1 million, StartEngine would collect $30,000 in kind of equity that was offered to the crowd. So if you're offering non-voting common shares, StartEngine would collect non-voting common shares. Moving on to Reggae Plus, very similar with only a few minor differences. One of them being that you can raise up to $75 million. So this is typically for a little bit later stage companies, maybe Series B, C, or beyond. We have some companies raising upwards of $20 million. Similarly, open to the general public, the same group of people can invest. However, for the company, there's a little bit more regulatory work that goes involved, and it's definitely more expensive. So you have to have a 2-year CPA audit from the start. You have a much more in-depth file offering called an offering circular with the SEC that really goes into the nitty-gritty of your business, how the funds are going to be used, the risks involved with your business and the offering itself. With all that said, it takes a little bit longer to launch the campaign, typically 3 to 4 months. Like we said, there's more work that goes into this. It's going to cost a little bit more, but the idea that you're raising a lot more money than you would through Reg CF, so it all evens out in the end. Your legal and financial costs might add up to close to $100,000, and this just goes to not paid to StartEngine necessarily, but to lawyers, CPAs, people helping get your campaign up and running. Same fees apply to this campaign, except there's also escrow transaction fees as it's done through the broker dealer. So I'll hand it off to Jacob to talk more about why you should raise from the crowd.
Perfect. Thanks, Daniel. Yeah, definitely appreciate it. So happy to talk through, why to raise from the crowd, specifically talk through some of the advantages that we see from this type of fundraising, and then some of the things to be mindful of as a company as well, who's, pursuing this sort of option. I think really the big advantages that we see for companies at this stage, especially given the current fundraising environment, is the ability to set your own terms for the raise. So you as the business would set your own valuation. You decide the type of equity that you want to offer to the crowd, and then you would set any investment minimums as well. So if you wanted to let people come in and invest for, $100 or $1,000 as a minimum, that's really up to you as the business. You're dictating all these terms, and we're offering it up to the crowd, and they can really choose to take it or leave it at that. And as Daniel mentioned before, you wouldn't be giving up any board seats or company control or anything along those lines over the course of the raise as well. So there's a lot of flexibility and a lot of control in the process here that you might not have with some of the more established institutional types of fundraising. I think the second big thing that we see for consumer-facing companies specifically is it's a really great opportunity to build brand ambassadors. And I think this happens really kind of at two levels. The first is with the existing customers that you already have, or the existing community that already exists around the business. So you can go out to the people who already know and love your brand and your product and say, hey, you're already a fan of what we're doing here. Why don't you come in and be a shareholder and be a part of the mission and the growth with us moving forward? And they can be a really great, source of, potential new customers or referrals or even investments further down the road for you in the business. And I think that really kind of ties into the multiple goals that we see companies often have while raising from the crowd. They're out there to raise capital, but you're also, proactively marketing the business itself and continuing to build that brand awareness and hopefully bringing in some new customers along the way. So there's a lot of flexibility throughout the entire process and the opportunity to go out and build that brand awareness while maintaining board seats and the company control and all those sorts of things that would be important to you in a capital raise. Some of the things to be mindful of. Crowdfunding, just through its nature, is a very public venture. There's a lot of information that has to be disclosed to the public, so these investors can make a decision about whether or not they want to make an investment. So your financials would be publicly available for the filing itself. We have to disclose the balance sheet, the cash flow statement, the revenue, kind of give those specific numbers based on the regulations the SEC has set for us. And so that information would be available to anyone who comes in through the SEC's public database. So even if they're not interested in making an investment themselves, all those disclosures are available to anyone who wants to do the digging for it. I think the second big thing is, it definitely is, it can be some work to get a campaign up and running. Our onboarding period tends to be about 6 weeks or so to get a campaign live on our platform. There is some upfront work that goes into getting that campaign up and running. And I think that's really the big trade-off that we see with the flexibility around setting your own terms and kind of dictating, the terms of the race itself, is you're going to have to put in that work on the front end as well to get that campaign up and running. And then really the last big thing is there are some ongoing reporting obligations. It tends to be a relatively low lift, just kind of depending on the company and the specifics of the filing. But we do have to continue to report to the SEC on an annual or semi-annual basis moving forwards after the round is closed out. So that's something that's a little bit unique as well compared to some of the more traditional fundraising methods that are out there. Once we're kind of in the campaign, we typically see 3 buckets of investors involved in any given crowdfunding campaign. Specific breakdown will really vary based on the company and the type of business, but broadly speaking, the first big one is the existing community around the business. It might be friends and family, it might be customers or partners getting involved, and some companies are actually bringing in their existing investor base to come in and help in the round as well. So it's a great way to kind of funnel all those people into one place and make it easy for them to make an investment directly into the business. The second big bucket would be any new investors. So this would be the general public who isn't familiar with the business and has not invested through StartEngine before. And we actually have a full in-house marketing team here at StartEngine. So we would support any paid media campaigns you wanted to do, whether it's Google ads or Facebook, LinkedIn, Instagram. There's usually a specific strategy on kind of a business by business basis that we'll try to employ just to see what makes the most sense. It's kind of based on the type of company that we're working with. And then really the final bucket of investors that's usually involved is our existing investor base. So we have around 800,000 investors who are registered with us today, and they're always on the lookout for new and exciting businesses that might fit their specific investment types or their investment thesis, whether it's medical technology companies or consumer alcohol brands or robotics and drones companies. We've seen a really wide range of types of companies across our platform, and our investors are definitely always on the lookout for some interesting ones that they can get into next. Just kind of broadly speaking to the equity crowdfunding process that we typically employ here at StartEngine, it really is, kind of a learning and trying to determine whether or not it's a good fit for both our platform as well as the companies that we're working with. we want to make sure it aligns with your goals as a business and, can help determine whether or not equity crowdfunding could be a good fit. But once we determine that is, most companies will start off with that Reg CF round that Daniel was speaking to previously. So that's that $5 million campaign that we can typically get up and running pretty quickly from a regulatory perspective. So most companies will start off with that. And then if a company is interested in raising over 5 million, we can be setting up that larger Reggae Plus campaign in the background. So as soon as that small campaign closes out, we can roll right into the larger one and continue the investing momentum over time. But we do have a lot of companies who will do multiple Reg CF rounds, for example, or multiple Reggae Plus campaigns. It really just kind of varies based on the business and whatever their specific fundraising goals are. And why StartEngine? Really just to speak to some of the high level metrics and some of the established traction that we have as a business have. We've been around about as long as equity crowdfunding has. So we actually launched the first campaigns in 2015 and 2016. And since then, we've raised a little over 600 million for the companies that we work with about 250 million of that raised last year alone, actually. So we've definitely seen a lot of really quick growth in equity crowdfunding over the last couple of years. And just based on how it's trending this year, we definitely expect that to continue. We have around 800,000 investors who are registered with us today, and we have a great team behind us as well. So Howard Marks is our co-founder and our CEO, and he actually led Activision to a $75 billion market cap. So he's been there before and is very hands-on with a lot of the founders and companies that we're working with as well. So definitely a great name to have behind the business and a great resource for the companies that we're working with also. We were named to 2020 Inc.'s 5,000, so 10th fastest growing private company in California. And one of the other things that makes us really unique as a business is we actually have a trading system called StartEngine Secondary. You can think of this as like a mini New York Stock Exchange, where you as the business can decide to list your shares 1 year after the close of a crowdfunding campaign. So if you wanted to give investors the opportunity to buy, sell, and trade and get liquidity a lot earlier than they might otherwise see it, that's something that's pretty unique in the equity crowdfunding space as it sits today. And then really the last piece is we're Shark approved. So we have the renowned businessman and investor, Kevin O'Leary, behind us. He's a great face to have behind the brand. He does a shark pitch competition with us each quarter that's led by our partnerships team and marketing teams. So he's been a great face to have with us as well. And then really kind of the last pieces here around, why StartEngine. I think the first big thing is rolling closes. So after a campaign is launched on StartEngine, you can actually decide to start taking out the funds the investors have given you after the campaign has been live for 3 weeks. So you don't need to wait until the end of the campaign, and you don't need to hit your fundraising goal first. So if you're trying to raise $1 million with us, for example, and you've raised 500,000 in the first 3 weeks, you can take all of that out on day 22 of the campaign and then keep raising towards the full amount. So you have access to the funds a lot earlier in the process than you might otherwise see it. And there are no penalties if you don't reach your full fundraising goal, for example. I think the other big thing is we have a lot of resources in-house to support the companies that we work with. One of them being our in-house transfer agent. So we're actually able to keep a record of all the shareholders who come in through the campaign, help manage transfers of ownership between those shareholders, and even help handle some of the investor relations through our investor experience team. So there are a lot of resources that we can provide on the back end to make sure that managing all the investors who come in through the campaign is as seamless as possible. Another big thing, we see a lot of the investments from any given campaign coming in from the existing investor base that we have here at StartEngine as well. Typically anywhere from like 20 to 60% of the amount raised, just kind of depending on the specifics of the campaign. So we definitely bring a lot of investors to the table, and they're active and excited to invest in the types of businesses that we see on the platform. And then just to highlight, we had about 252 million raised last year alone. So that was a record year for us and a really big chunk of what we raised thus far. And we definitely expect that growth to continue in the future. And I think that's really highlighted through what we're seeing over the market volatility that we've seen over the last 90 days or a few months here. Equity crowdfunding has been relatively stable across the board, compared to some of the traditional fundraising methods that are out there. We don't see any signs of that slowing down on our side. We've had really consistent raise amounts over the last 12 to 16 weeks. So we feel really confident that our investors are still excited about the future and on the prowl for businesses that could be a good fit for their investing thesis. And just to kind of highlight that flow that we talked about previously, Flower Turbines is a really great example of how they've leveraged equity crowdfunding to be really their primary source of fundraising over their life cycle. So they're really interesting clean tech company that did 2 Reg CF campaigns with us, and then did a follow-on Reggae Plus round as well, with about $1 million raised in each of those Reg CF campaigns, and then just north of 8.8 million for the Reg A. So they did about 10 million with us across our those 3 campaigns on the platform altogether, and have built a really strong base of investors who are excited about the business and always, excited to come back in for a follow-on round as well. And I know that's a lot of information all at once. I definitely appreciate you guys all listening in. Daniel and I are definitely happy to take any questions or clarify anything that has come up over the course of the discussion here.
Perfect. No, that was great. So yeah, if anybody wants to unmic or ask in the chat, feel free to do so. And yeah, I'll kick off with a question too. Like, what kind of factors, when you're screening companies, do you look for to figure out if it's going to be a good fit for crowdfunding?
Yeah, it's a great question. It's really a mix of things, kind of depending on the industry and the type of business. I think the key thing is we are looking for the existing traction points that the company has that we feel like we can use to get the investors excited. So we have some deep technology companies like medical technology and robotics that might not be in the market yet, but they have some really cool technology and some patents that we can use and some notable partnerships and things along those lines. Whereas, a consumer-facing brand like consumer alcohol or consumer fintech, we're looking more at the existing revenue they might be generating or the existing user base that they have. It'll really vary based on the company, but we actually have an investment committee here at StartEngine that reviews all the companies that we take on as well, just to make sure we feel like we can help them fundraise effectively, just kind of based on the traction points and what we've seen resonate with our investors historically.
Sounds great. There we go. We had a question on if you raise for real estate syndications and deals.
So per regulations, we're not allowed to raise for funds or syndicate groups. Unfortunately, we've tried in the past, but have been shot down by regulators. Real estate is something we're looking into. As a company, we had launched a REIT to see if there was interest. There was some. Unfortunately, our team didn't really have the bandwidth to follow through yet, but we have plans to get back into real estate soon as we launched StartEngine Collectibles, so people can invest in comic books, trading cards, art, and we're planning to add real estate to that group as well. But that would be internally, not from an external source.
Sounds good. And then for companies that do a mix of traditional Reg D investments with crowdfunding, is one usually before the other, or what stage do they typically start a crowdfunding campaign?
I think it'll really vary based on the business, honestly. We've definitely seen a really strong mix. So we have some companies that will raise institutional capital or do a Reg D first and then come to StartEngine. We have others that'll do it in kind of a reverse order. So I think it'll just vary kind of based on the specific goals of the business. But we've definitely seen a strong mix of both ordering.
Most of the time, I would say there is some form of funding that the company has before coming. Equity crowdfunding is typically not the first form of capital they're receiving. Usually they've done minimum a friends and family or an angel round before equity crowdfunding. But then, like you said, in terms of institutional, a lot of the times they raise simultaneously. Like Jacob said, you can do rolling closes. So you get that inflow of cash. It's, cash flow coming in throughout, a 2, 3, 6 month period while waiting for that one big check from an institution. Single asset investments, would those be suitable? From our understanding, we're not, we wouldn't say someone could come on the platform and sell an asset themselves. However, if there's a certain asset you're looking to sell, depending on what it is, we could connect you with our collectibles team who could potentially work with you on optioning the item or purchasing it outright for us to offer.
Perfect. Yeah, and then what about, I've seen some campaigns that have they're equity crowdfunding campaigns, but also have some investor rewards associated with them. Is that or yeah, how does that play into the platform as well?
Yeah, it's definitely something that we can offer. So, Daniel kind of talked through those different types of crowdfunding campaigns at the start. We're primarily focused on equity crowdfunding campaigns, but we can offer perks and rewards for the investments as well. So I think we see this pretty consistently with consumer-facing brands. So like consumer alcohol brands, for example, might offer a reward for a $500 investment or a $1,000 investment or whatever it may be. That's something that we definitely can support for any companies who want to offer that in addition to the equity investments through the platform. And it's something that our in-house marketing team actually supports for the companies that we work with as well. So if a business wants help structuring those perks and figuring out what those should look like, that's something that we can get hands-on with.
Perfect. Yeah, any other questions? You can either unmic or just ask in the chat as well. And then what's the best way if people are interested in exploring whether or not this is going to be a good fit for them? What's the best way to do that and connect with your team?
Yep, putting emails in the chat right now. Jacob can be reached at jacob@startengine.com. And for the partnerships team, you're welcome to reach out to us as well. You can reach us at partnerships@startengine.com. Of course, you can always head to startengine.com. There's a whole bunch of resources on why you should raise capital. A lot of the information that's in this, presentation, but you could check out all the offerings that are currently there. Send emails, whatever works for you.
All right, that sounds good. Yeah, and then I've seen too. I mean, even as entrepreneurs as well, it's a good place to check. Explore the investment side and go through the process of if you're putting $100 plus into a few different startups, you can kind of go through that mindset of what are investors looking for and how am I going to do this as an investor too. So definitely worth exploring on that side too. Cool. Yeah. So we'll share, I guess, yeah, if there's no other questions, we can share out the recording afterwards for all the participants and also share out the links you put into. And yeah, really appreciate all the advice on what you guys look for, what makes a good crowdfunding campaign, and really glad to have you guys as a resource here for our community.
Yeah, thank you so much for having us, and hopefully we can help some